And we are live, we are live, we are live. Good morning to everybody who is joining us here on Behind the Markets. And good morning to you, Vernon. How are you doing, my brother?
Good morning, thank you. I am fantastically handsome as I look. Thank you. How are you today?
I'm gonna say I'm as intelligent as I look. I think I'll stick with my strength. I'm not, I'm not gonna start throwing out the I'm handsome ones. Those are confidence levels we're not sure of. Yeah, just let one of these Cristiano guys walk through here, and then all of a sudden that starts going up the tubes, right? But today we're gonna get started in our conversation about. Remember that today we're talking about the learning mindset, so that's gonna be our chief convo point this week, talking about the learning mindset and how that affects. Today we're gonna be talking about how that affects life in finance. I'm gonna talk about literacy levels and learning when it comes to money, how you should address learning, how you should assume it, what you can learn from. Because that's also quite important in terms of your growth journey, in terms of money. But first and foremost, Vernon, it is time to touch on the markets and continue down our journey. The Kwacha has not stopped moving into the negative. We are officially on day 119 of consecutive loss of value of the currency against the US dollar. I say it again, 119. The record, remember, is about 205 days, which was the middle of last year. So pay attention to the fact that this just seems to keep going on and on and on and on. And it doesn't seem to keep stopping. But the dollar is up. The dollar was up 0.3% yesterday, and it was up 1.86% on the week, and up 17.17% year to date. So you are seeing that the dollar is still getting a bit of momentum, and it's still strong on momentum upwards. The rand was down 0.03% yesterday, only up 8.67% year to date, but still up, causing a little bit of inflation in the year. Remember, that means that you're getting inflated prices that will probably come in from South Africa because the rand has strengthened against the kwacha by 8% year to date. So for these 3 months, we should be expecting quite strong prices of imports. We did see bonds move down about 0.0%. There was a slight movement downwards, especially from the day before. We also have seen that bonds in US dollars have also failed to move as of yesterday. We didn't see much in terms of the movements, but we are still down 10.07% year to date versus also interest rates, which are up 20 basis points. As of yesterday. So there has been a bond sell off on the secondary market, signaling that as we're going into an auction this week, we are probably facing higher interest rates. And good morning to our fellow viewer here, Priscilla Zulu, who has joined us. And good morning and happy Tuesday to you and to all of you who are joining us. Commodity prices, Vernon, have continued down the slide. Hopefully, I can be heard. But prices have continued down the slide. But you did see copper moving very close to the 9,000 mark. It has rebounded strong as the banking sector globally is starting to get its legs back, up 0.49%. But oil is up 2.49% yesterday because of the Kurdish halt on production. So you did see that's a threat for prices coming back up. But we are currently on track, Vernon, to see that prices of oil will probably stay flat, 28.51, based on our outlook and our outlook in general. Gold in dollars did come down by 0.36%, mainly due to the banking recovery, which is the main reason copper has gone up. So we are seeing that in kwacha, or gold was down 0.07%, but up 26.64% year to date. Cryptocurrency also went down. Ethereum down 1.8% yesterday as well due to the banking recovery, and 1.1% down on Bitcoin, which has back above 500,000. That's the main trading point for Bitcoin. It is back above 500,000 at 572,590 per Bitcoin. Remember that one Bitcoin is broken into 100 million satoshis. So one of the things we should actually be looking at here also now is which of our wealth insurance assets are doing strong before we get into our break. Bonds are up 5% year to date, just below inflation. The stock market has recovered back up by 0.03%, mainly due to an Airtel announcement of a dividend, which pushed up its share price and therefore pushed up the trading price after a horrible Standard Chartered sell-off. We have seen the dollar is up 17.717%. Gold is up 26.64%. Bitcoin is up 90.52% year to date. And you've got Ethereum up 66.87% year to date. So that's where your assets are sitting. People have given you enough cautions to know which ones are the volatile assets and which ones should be in your mainstream portfolio. I think if you try and point fingers at me that I'm leading you astray, there's enough evidence to show you that I've told you to always factor in the risk and not just run after the return. On the other side of things, Vernon, we're going to be looking at the four horsemen, how those are doing in terms of economic data as well, especially with industrial profits coming out of China. We'll also be looking at our main deep dives, the two big stories that came out in our 5 things to know. And then we're going to start with our topic of discussion, which is learning about money. Thank you very much, Vernon. On the other side.
Hello, and still welcome back. Of March 2023, and thank you so much for having still, staying locked into money. You were just running us through some of the items that we'll be getting back with after the break.
All right, so thank you very much, Vernon. The main thing I wanted to touch on today, firstly, before we get into our daily deep dive, is our data run in terms of how certain parts of the markets have done. We did see that certain parts. Sorry, let me just open up. Sorry, our four horsemen. Our four horsemen outlook has shown us that oil is up, as you said, due to the Kurdish production halt yesterday. EU money supply and loans did show slowing, mainly due to the rate hiking cycles, while the UK 3-month interest rates and 6-month interest rates was still rising, while the 2-year notes actually started experiencing decline. So the shorter part of the curve is coming down. U.S. banking stocks were actually up, as Silicon Valley Bank is about to get a purchasing or refinancing, and gold also dropped below 2,000, mainly due to the risk of sentiment. Main news that we did also want to take into consideration was that German business climate and sentiment data also showed that the German industry, or the German business sector, also showing some recovery and optimism. Remember, Germany is one of the top economies in the world. In fact, it's Europe's biggest economy and one of the biggest production centers in the world. But the biggest news that did come out yesterday was China's industrial growth. Chinese industrial data, which we're just trying to pick up from the latest read, but I think that's been pushed to today. That has been one of the main pieces of news that actually does end up affecting copper prices and also our export expectations. So that's been pushed to today, while we're seeing that core CPI data in Japan has come up to 2.7%, and therefore it's declining. So we've got declining inflation data happening in Japan, so highly unlikely that they're going to start picking up interest rates. Other data that we're expecting to see today, as we said, Chinese industrial profits will be expected to come out today. They were expected yesterday, but they have been pushed to today. Nationwide HPI coming out of Britain, in other words, inflation data expected to come out of Britain. Housing prices expected to come out of America to show whether the housing market is still in a booming cycle, while simultaneously we also have central bank speeches coming from Christine Lagarde and various other and Andrew Bailey from the Bank of England to see what sentiment factors should be out at play today. While the final part of it will also be API crude stocks, which will tell us which way the oil price is going. But we are expecting that oil should be staying flat in Zambia. Now, but then there are two main stories that we have here in our daily deep dive as we switch into it. The first one that came out is obviously Zambia and DRC have signed a deal to now start working on EV batteries. So to try and now develop the EV battery supply chain. Now, I always say this with our hopes and ambitions, we just got to make sure that we have the bias, because the problem with the EV industry is that there is a battle happening on both sides of it. I wish it was as easy as we thought. But unfortunately, the way China and America are going after one another, it is a brute force battle, which people are actually having to face off with now. And you have to and unfortunately, whoever you're selling to, you can end up on the other side. Now, I'm suspecting that when it comes to EV production, one side is that America is saying they're going to try and help us out. But meantime, America has also now creating laws to protect their EV sector and battery sector, now saying that they'll only give discounts to EVs where batteries were produced in the United States, where at least 40% of the value chain was produced in the United States or in North America, or a country which has a free trade agreement with America. So that's part of the conversation that we should actually be looking at now. Who are we going to be selling this to? Are we going to be selling this to the East, or are we going to be selling it to the West? Because on one hand, America is actually trying to say we want to help you out, but then they're also putting prohibitive laws. On the other hand, China has been your all-weather friend, but they're persona non grata when it comes to America. And I wonder if this also has to do with the visiting of the Vice President of America, which is President Harris, who, by the way, Vernon, yesterday released her playlist for her Africa trip on what's it called? She released her playlist for this trip that she's doing to Africa. So, in other words, remember, she's here for Ghana, Zambia, and one more country. But it came out on Billboard yesterday that Kamala Harris has released an Africa playlist for her trip. Talk about virtue signaling. The vice president has released a playlist on Spotify called My Travels, highlights various artists across Ghana, Tanzania, and Zambia who she wants to see. Talk about virtue signaling. Anyway, she did live here at one point, so we can't give her the hating, but talk about virtue signaling. But some of the songs that made it onto Kamala Harris's Africa playlist, and I want to pick out our ones here. There is Chile One, who has actually made it onto the playlist. Chile One, Mr. Zambia, I Love You. That is the song that is on her playlist for when she wants to come to Zambia. And the other ones that have made it for Zambians is Chef 187 and Blake's Nobody on Kamala Harris's playlist coming to Zambia. I think those are the only two Those are the only two Zambia artists who I can pick up, unless I'm just not in with the latest crowd. My bad if the youth want to start coming after me. But those are the only names I can see, which I can reckon. Oh, yeah, sorry. One more. I did miss this out. My bad. I think I might get crucified for missing this one. But Yo Maps also made it onto Kamala Harris's Africa playlist, where she's going to be listening to
Yo Maps.
which is gonna be listening to Aware. So these are the songs that we're expecting that the U.S. Vice President will be bumping when she comes in. Now the rest of these are Ghanaian and Tanzanian songs. Majority of these are Ghanaian, where you got Sakodi and so forth, who are going to be on that playlist. So that's just a little bit of an interesting story that she released yesterday. Actually, it came out on Sunday because she arrived in Ghana on Sunday, and she's expected here on Friday because she'll be going to Tanzania next on Wednesday, and she'll be here on Friday. Hopefully, then Yo Maps, Chilawan, and Chef can be part of the people meeting. Since she's been listening to their music, they can be part of the entourage who are meeting her. Anyway, that's enough of the fun stuff for today. Going into the other parts of the story, we did see. My suspicion is possibly she could be coming here to also discuss the EV supply chain. Because that's obviously part of the main conversations. Africa has become the center of conversation because of the electric vehicle supply chain. Obviously, they have problems with President Emerson, as they say, Manu Gwagwa, when it comes to, yes, he was Mnangagwa, but the Americans say Manu Gwagwa. Now, they've got problems with, obviously, the lithium supply, and Zimbabwe is going to be one of the biggest sources of lithium. But remember that there are two types of batteries. Lithium batteries are very popular in China. That's why Zimbabwe doesn't have it's not much of an issue to America. But what they are worried about in America is cobalt batteries. They need cobalt, manganese. Those are the main things. Cobalt, copper, and manganese are going to be important for the American style batteries. So American batteries are very popular on that side. So that's kind of the battle that we're seeing. That's why I don't see her trying to sneak a visit into Zimbabwe to try and see President Manu Gwagwa and his team. But I don't see that trying to. I'm going to keep saying that, right? I'm going to keep saying that. And his team. But she's here probably obviously for that. That's one of the issues I probably think is going to be on the supply chain. They're going to talk about, it's trying to help Africa's economy. But right now they're in an EV arms race. It is a serious EV arms race. And if our leaders always have to make sure to say what President Manu Gwagwa actually said in an interview where he said, we are enemies of none and friends to all. That is our stance when it comes to doing business. Absolutely. Regardless of how many people visit us, regardless of how much Chef 187, Yo Maps, and Chile One music they listen to, we are friends of all and enemies of none. We're not involved in your squabbles. If you want to do business with us, come and do business with us. There's no issues. Those are the only issues that we're asking. And also, whatever issues you sometimes believe in, just keep those things on your sides of the borders. Let's just stick to trading. But let me tell you one thing. What China has done for Africa is that China has created a threat where the Western world no longer seems to want to impose its social beliefs into Africa anymore, because they've seen the firing back of that. That when they press too hard on their social issues to Africa, what ends up happening is that we end up in a situation where Africa starts trading more with China. So remember that Africa is now a bigger trading partner with China than with America. So that's of concern to people like President Harris and her team. That to Vice President Harris, and her team. Well, at the age Joe Biden is, let's speak prophetically. Future President Harris, I don't see that brother having another race here. But effectively, let's take a look at it from the perspective of the fact that she's probably here to try and deal with the trade discrepancies that have happened. America was the chief trading partner with Africa, but now it is China. So those are things that she's probably coming in for. And this EV conversation with DRC and Zambia is probably playing out just around that time. So America does want to start getting batteries. That's why you had that cobalt mining company that was set up, that's funded by Jeff Bezos. Bill Gates, these companies that are here for it, because they understand the importance of the EV supply chain and the EV arms race that's basically picking up. Other piece of news that did come out yesterday, Vernon, was the conversation with was the passing of the quantity surveyors bill. Obviously, to try and bring some sanity to that industry where some people were operating unlicensed. And obviously, we do have some of our one and only in this industry who can actually help us understand that. But I think just like every other industry, okay, I as a financial advisor, I'm licensed, I'm regulated. Their bankers are licensed and regulated. So all people who do some sort of financial advice, especially to do with critical markets like housing prices, will find themselves in a situation where they have to have licensed individuals. The only thing I always hope for when it comes to any new bill that regulates an industry is just always to make sure that it doesn't create unfair advantages for the incumbents and create barriers to entry. This has been what has happened a lot in the securities market, is that the requirements have formed a barrier to a lot of new entrants, and they've been discouraging to a lot of new entrants. And what that's done is cemented the position of the incumbents at the moment. And that's actually been unfair to the consumers a lot. Now, I'm not saying that's what they're doing with this market. I'm just saying that I always worry that the government should always bear in mind that licensing fees are often the big prohibiting factor of new competition coming in, keeping markets fresh and customer centric. Because the less new competitors can come in, the less customer centric a market can be. So you always want to make sure that markets are as customer centric as possible by allowing as much competition to always prevail so that the customer gets the best out of it. But again, it is an industry that does need sanity because housing prices in this country, Vernon, and property prices are all over the place. Two properties next to it's like there's no sanity half the time. But then I can't even blame the surveyors because people just sometimes just thumb suck the price of their houses. No, that one down there sold it for this much. Even me, I deserve. That's the mentality you see when it comes to housing prices. But anyway,
I think with that regulation, that probably even led to, having to sell properties to multiple, individuals because everyone felt like they can survey and, grant people lands and whatnot. And today, such issues, unfortunately, still, actually rise up with city council where a piece of land was actually being sold to multiple people because there is no regulator, in the entire, sector. I think this one will be really good that we can have, and order.
Trust me, there are issues here. If there's one industry where there's issues, it's housing, it's home ownership and construction. But you see, there's a lot of informality. And look, we've experienced it before. Even my family, when I was younger, where we had a piece of land and somebody just rocked up and said, "No, we've bought this," and we told you who told you bought it? Who did you buy it from? These are things like you do get double sales of land, which are all over. But but that's also got to do with the agents. And how land is being sold. So the housing sector obviously is trying to clean up, and the property ownership sector. And remember, it is a critical asset in your finances. Let's go quickly, Vernon, into our chart of the day. Not chart in terms of chat, but actual charts of the day. And the chart of the day, which I want to talk about, Vernon, is which countries have got the highest wealth, but also which country have got the highest literacy. So this is the chart of the global financial literacy by nations. And I'm sure, sorry, it's just taking a bit of time to show, but you can see the darker blue countries are the ones where there is strong financial literacy in those nations, and the almost orange and brown countries, although that may sound wrong, but the orange and brown colored countries there are the ones where there is poor financial literacy. As you can see, Vernon, we're not featuring very strongly. We're somewhere there towards the bottom levels. When it comes to financial literacy, but it's the whole region. I mean, obviously, places like Angola, like even worse. The only shining light in Southern Africa, ironically, for financial literacy is Botswana, as you can see there. Botswana is actually the one that stands out in terms of higher levels of financial literacy, but that's because Botswana also has higher general literacy. Okay, the people of Botswana tend to go to school, they tend to go to college, they're banked. So you can actually see literacy levels are quite strong. As you can see, Africa is suffering horribly when it comes to financial literacy. South Africa seems to be one of the better ones as well. But when it comes to financial literacy, we're all somewhere around the 20% to 40% population. As you can see, the top part, there, America and Canada, very strong. Europe, extremely strong. Australia, quite strong as well. But these other countries, be it Russia, China is still struggling. China is still picking itself up. Remember that it's still got still a large chunk of its population who are living in lower income perspective, but then they've been pulled out of poverty, but they're in lower income. But now take a look at this chart very carefully, John, and take a snapshot in your mind of it. And I'm about to replace it with a different one that talks about wealth per capita. Wealth per capita by nation. And you will see something rather interesting, because when you look at the chart of wealth per capita by nation, which is backed by the Credit Suisse report, now take a look at wealth per capita by nation. Why, Vernon, doesn't this look almost the same? The darker blue nations are the ones which are the wealthy ones. The pink nations are the ones which are the non-wealthy ones. So look at how financial literacy and wealth, except for China being the example, financial literacy and wealth seem to move together. So that should tell you this. And by the way, this is median wealth per adult. This is not average wealth, which is sometimes skewed by maybe the top 1% being rich. They're looking at median wealth per adult. So you can see that the countries which actually tend to have the higher levels of financial literacy also exhibit the higher levels of wealth. Because, Vernon, before you acquire a wealth in money, you first must acquire a wealth in knowledge. And that chart should kind of help us now posture what is the first step in building a wealthy nation. Why, Vernon, should it not be making people literate with money? Wouldn't you agree?
Absolutely. I feel if my people have money or are financially literate, that means they will be able to generate lucrative ideas and therefore they'll be able to pay taxes.
Therefore, yes, they'll be able to pay taxes. They'll be able to own assets. We'll have less black tax having to issue around society. I know people get sensitive about that word, but you know what I've learned, Vernon? The people who are the most sensitive about the word black tax are often the recipients of black tax. That's why.
Yes.
It's not the ones who have to pay it. They're the ones who are the recipients. They're always talking about, no, that's our culture. Yeah, no, let's see when you have money. Let's see if it's your culture. So today I want to talk about learning and money, and that's our topic of discussion. Okay, now yesterday we brought up that the first pillar of the growth mindset, Vernon, is learning. And three principles to learning are: one, learning is something that is natural to you. Two, learning is something that is learned better when you have application attached to it. And three, Vernon, and most importantly, learning is something that must be done regularly and continuously. It must be a habit. It cannot be an instant. You don't just become a financial genius. You have to start doing things constantly over and over. So let's talk about to people what is the process of trying to learn. Well, I want us to talk about the first thing you should be aiming for, and that is what I call the Dickory model. This is something that I make sure that people understand, and this has got to do with what you should be aspiring to in terms of your knowledge. And this is a pyramid that I teach regularly to many people, because I have a process, Vernon, where I don't just believe in advising people and sending them into the market. Because the number one thing, and before I get to this, the number one issue you need to understand when it comes to Zambians is Zambians have the biggest complaint that financial assets are highly complicated. So they've actually said that they're too complicated, and the processes of accessing them are also too complicated. So it's complicated concepts and complicated processes. And this is what most of the retail investors and the retail users of financial wealth have been complaining about. Now, even when they say it, they say that the key things they're looking for in an asset is: one, liquidity. It should be something that I can convert to cash quite easily. Two, simplicity. Three, accessibility. These are the three most important issues that a Zambian investor is looking for whenever they're looking to own a financial asset. So they're looking for something that is simple. Now, financial assets by nature, Vernon, are quite complex. But to simplify something also means you should educate someone. So what people need in order for this, Vernon, and this is why I'm not too good with the word financial literacy. Literacy doesn't cover wealth and wealth creating assets, but obviously it does show that the more literate people are, the better a chance they have. But in Zambia, what we've seen is the majority of people participate in spending money and making it more than they're doing in multiplying it and maintaining it. So remember, there are 4 money skills that are important that a person must learn. The 4 money skills are make money, manage money, multiply money, maintain money. These are the 4 things a person has to learn. And we've constantly gotten people up to making money but spending money, but they're not managing it, they're not multiplying it, and they're not maintaining it where it can transition from one to another. So let me tell you how your brain is probably going to assimilate
So
information even
generally,
better.
uh, so generally, investors find it complicated to remember around financial assets because generally of less literature or financial education, maybe.
It's true. There's not much financial education available, but there's also not much desire to be educated, Vernon. People want to be rich more than they want to be wise. That's also a problem.
That is
People want to be rich
very
next
key.
week. Yeah, there's also a lot of short-termism. People when people fall for scams, you also have to remember that half of those scam victims also wanted to be rich next week. Right. So this is a pyramid that we created on how to actually look at information based on finance, but this has got to do just generally. But the pinnacle of what you want, Vernon, is wisdom. Okay, you want to be able to have wisdom because wisdom, Vernon, governs your decision making. And the number one weapon in finance is decisions. Okay, whatever you're doing, it is all about the decisions that you are making at the end of the day. So a person must be able to filter out because coming from the outside, you receive data, okay? Whether it's price movements, whether it's strings of text, whatever it is, you and your senses are receiving data. This is things like facts, figures, indicators, signals, whatever it is. When you hear me talking about the kwacha has moved by X amount, you hear me talking about the bond prices are up, you hear me talking about bond yields are down. Those are pieces of data. So what you need is an information system that then contextualizes that data, gives it context, making sure that that data is organized. If I tell you, Vernon, the kwacha today is 22, is 21.8, is 21.2, what does that mean? Well, it means something if it's next to what was yesterday's price, what was the price 6 months ago, what was the price 12 months ago. So if you have time series, if you have organization, if you have labeling, all those things, that data now has a context to it. So you want to make sure that we have data that is contextualized. This is what our financial advisors and our financial information systems and radio stations like Money FM are supposed to be doing. We are now taking data from the market and putting it into context so that you now have financial information. Okay. And we must have relevant information that helps you. Not relevant in terms of that it's recent, and relevant in terms of the fact that it's related to important things that you need to make, important decisions you need to make. Now, once you establish that information is given to you, Vernon, then it must be interpreted. So this is where your financial education comes in. If you are financially educated, you can therefore interpret financial information. If you lack enough financial education, then you can seek wise counsel, which is your financial advisor, people such as myself, who can then sit down with you. Because we have the ideas, we have learned, we have notions, concepts, we are able to compare data from one string to another. We're able to have thoughts on it and discussions about it to help you with knowledge, and that will enhance your knowledge. Now, Vernon, there is a big difference here because most people stop at this point. They accumulate tons of financial knowledge, okay? They say, okay, I want to be able to interpret information. The purpose of getting financially educated, taking a course, being educated is to be able to interpret real time financial information. That is the purpose of it. But what is that for? It is for the purpose of creating wisdom. Financial wisdom controls your actions. And financial wisdom is being able to see a point of information, being able to discern a pattern, extract a principle, and then trigger a process that you need to be able to make. So I'm going to say that again. You want to make sure that you're able to extract a point of information, put it in its context, understand its meaning, and then be able to discern a pattern. Oh, prices seem to be rising. The market seems to be on the up. Then the principle, what principle does that tell you? Oh, when everyone's buying, should I be buying or should I hang back until they start selling? Then you know what process or what action you need to take. So the thing people need to understand is there is no shortcut between this point of financial knowledge and financial wisdom. And this is often the mistake they make. People who gather a lot of knowledge but don't have wisdom. This is why you want to try and have, for the first 5 years of your journey, a financial advisor who has that license and wisdom and is able to guide you through these decisions until you are able to understand the basics of thinking with which they do. You've read enough of your financial advisory statements, you've read enough of it, you've seen how your portfolio does, then you can make decisions yourself without having guidance. Because most people, I think this is where they go wrong. In fact, at the beginning of your investment journey, I've seen people can go without an advisor. But once people cross over the 1 million kwacha mark, they start to get very concerned that any bad decision could wipe out wealth that they've spent a lifetime building. So
Absolutely.
this is the principles of how your brain kind of takes in the information that you are dealing with. The purpose is not just to be informed. People just want to have financial conversations. Those are the ones who just gather information and they start commenting and blah and other stuff, and nothing ever gets done. Okay, people who accumulate knowledge struggle with taking action because they haven't synthesized that knowledge. And the difference between knowledge and wisdom is that somebody with wisdom has deep insight into that knowledge. In other words, I've seen three market upticks and I've seen two major market declines. I've seen how this market works. I have insight, in-depth look. I've had an in-depth look at how markets operate due to my experience in them and due to my knowledge and expertise in them. And because of the time I've spent, insight is developed by applying knowledge. You cannot, and I repeat, Vernon, you cannot build financial wisdom without the application of knowledge. You cannot become wise in government bonds without actually doing them or at least handling them for a period of time. Okay? You will understand how they theoretically work, but you always miss the realities of them. You won't see how they interact with the environment. You'll always have a lack of confidence in them. Because the biggest difference, Vernon, and I'm going to say this correctly now, is knowledge is what you know, wisdom is what you believe to be true. Okay? The difference is wisdom is what you have confidence in is true. Knowledge is what you know of. You're not always too sure because you've never tested it. So the best way to now turn your knowledge into wisdom is to take what you have learned financially, apply it to your daily lives, build habits around it, and see how the progress happens. See how it interacts with your environment. Okay, so that is one of the things that we all want to try and do. So Digwe is there, is learn how to collect data, gather it into information, and interpret it. Yeah.
With regards to financial education and just being able to walk through the process, you amount, or I mean, you amass as much knowledge before you can, eventually, as you put. And I think last week we did tackle the aspect of wisdom and the application of the knowledge that around the finance itself. But then also, I'm intrigued. I mean, if we have this tendency wanting to get returns or get profits and get rich quickly, and instead of following the procedure of building the wealth, which will take your habit, personality, building certain traits and whatnot, where are we? Where's this mentality coming from of wanting to get rich faster? And not having to go through the process and learning how to make money, multiply, maintain the money, and what was the other item you mentioned?
Manage.
Make money,
manage, multiply, maintain.
As well. Yes,
well,
absolutely.
I mean, we don't want to get
where's this mentality that we have?
Well, two things have happened, Vernon. One is that poverty does create short-term thinking. When you have a majority poor people, unfortunately, they will always because it's a disastrous situation. Poverty is a very painful situation, and one of the worst things it does to people is it makes them think short-term. That's why gambling is prevalent in poor societies. That's why alcohol abuse is prevalent where there's poverty. It's simply because those things are basically signs of short-term thinking. And unfortunately, most people just want to get out. And then there's a lot of what we call living for envy. You know, there's a lack of living for purpose and a lot of living for envy. Vernon has this, so I also want. This one has this, and I also want. A lot of our financial choices and decisions are based on our envy of other people and our detesting of our lives. Social media has also put this on steroids, by the way, as everyone keeps flashing their cars on social media and flashing their lifestyles and showing that they're living their best life. You are there comparing people's picture of their lives to your life, which has ups, which has downs, which has ins, which has outs. And therefore, unfortunately, you're creating very bad financial behaviors. And second thing, by the way, and the most importantly, even third thing, is that a lot of this is passed down. Okay, unfortunately, culture is passed down from generation to generation, especially through the families. So it takes people breaking cycles, because you may start saying, okay, it's time for me to save and start making long-term decisions. And then your family members come, give us him where. You know, these are the issues. You don't know. What are you going to be doing? Okay, then your friends, you are trying to make some good decisions with your life, and then your friends come, hey, well, let's go and drink tonight. What's all this saving? You won't live to see that money. These are the tough things that people have to look at, because trying to change yourself financially means that you're going to have to start cutting some people out of your life, drawing boundaries around your life. It's serious issues, by the way. Okay, these are serious issues that people have to go through. Even you yourself have to make some serious changes and sacrifices. So the problem, Vernon, that people struggle with taking a long-term approach is actually captured in Atomic Habits, where he says one of the reasons people give up on good habits is because good habits, the payoff is always later. Okay, the payoff, Vernon, for doing something right is always later. And there's a pain that you're going through now. So the problem with good habits is you feel pain now, and you only seek the payoff later. But the problem with human beings is that we're pain averse. We're always risk averse, pain averse, loss averse. Okay, so we're always trying to run away from pain as much as possible. But then the problem with bad habits, Vernon, is that the payoff is now and the pain is later. You get money and you spend it all now. The payoff is now. You're enjoying that now, and the pain is you're broke later. Okay, now that's what will happen. That's what will catch you later. So that is one of the reasons, is because it takes a lot of re-engineering of a person's mind to seek long-term and to seek long-term sustainable benefits as opposed to instant gratification. But how do you do that, Vernon, in a country, or not even a country, a generation around the world who are now becoming accustomed to instant messaging, instant delivery, instant access to information? Everything around you, Vernon, is instant. So if everything technological and digital around you is instant, what do you think you'll be expecting about your money? You'll be expecting instant. So people do lack resilience. That's also one of the main driving force, Vernon, behind people being able to make good financial decisions is resilience. And unfortunately, resilience is a quality that many, I can't say many enough times, Vernon, many people lack. Okay. No, it's serious. Like, resilience is a serious problem. So yes, people need to build resilience. And how do you build resilience so that you can now apply the things you learn consistently? You build resilience, Vernon, by one, understanding money. Okay. If you understand money and you understand wealth, and today I'm going to talk about two key things: the sources of learning, okay, and then I'm going to talk about Vusi Tembukwayo's 5 rules of money, 5 rules of money and wealth, and those are very good ones. So yesterday, Vernon, we touched on this chart, the source of learning, where people learn from. And I also want to tell you that this is also significant when it comes to finance, money, and finance. Okay, so 3 things are going to teach you. The 3 things that are going to teach you is 1, formal education. And formal education is going to come in the form of taking a financial class or a course. You can have a structured learning program. You can have workshops that you can go to, financial literacy workshops or financial workshops maybe sponsored by your workplace and so forth. And you can also have learning materials. Okay, those are very important as well. Learning materials are extremely important that you can also get through. So that's kind of information that you want. You can also buy books on money and learn those things. But remember, without application, your learning is not cemented. If you do not apply what you learn, okay, if you read a book and you're just going out in there to go and talk about it and chit chat with your friends, your life will not experience any change. And also 2, you won't even remember that stuff in the long term, because information that is not applied fails to be remembered a lot. So application actually reinforces your remembrance of it, especially if you apply it into a daily habit, a daily, weekly, or a monthly habit. So get into that habit of whenever you read a book and you're trying to synthesize and distill information out of it, ask this question. What about this information that I've just read? Even if you're sitting here listening to a show, what about this information that I've just heard can I convert into a daily habit? Okay? When you get information, because that assesses the relevance of that information. If you cannot convert it into a daily habit, it is just conversation. But then if you can convert it into a daily habit, this is growth material. This is growth fuel. Okay? So the trick with learning is, can you apply it? If you learn things you can constantly apply, or at least you can work on applying, then that is good. That's why I always say, people, read in your season. Read what is in your season, because the highest probability of application. But however, just reading alone, Vernon, is going to have an issue. But then the next step you also want to do is you can learn from examples. You can learn from social education. So interacting with other people teaches you how to learn. So the other things, there are two things you can do, and I'm going to show you two examples about this. One is you can learn by being coached. You can go and get a financial advisor, somebody to coach you, someone to help you. So to help with this point, Vernon, I'm going to share a video by Dwayne Wade, the basketball player, where he talked about how his journey of trying to manage things himself to eventually going to get a financial advisor. So here's his story.
I didn't trust anybody. Early in my career, I didn't have a financial advisor. I didn't trust anybody. I didn't know anybody. So I was kind of just doing it on my own. And I had this plan. I'm like, okay, if I can save $1 million out of this 2-point-some million dollars that I'm making, that'd be good. And I think I ended up saving none. I spent all of it. I went through it. My family had needs, but I regret not having someone early in my career to help teach me about all of this money. I went from making $200-some odd in college to becoming a millionaire overnight. And I didn't know what to do with it. I was just sending my credit card to people like, hey, can I get that Bentley? I never really reached out to someone and said, hey, what do you think I should get this right now? Or you think I should purchase this house right now? I just kind of did it all on my own, and that is not smart, people. Have somebody that's smarter than you that can help you with your money. I wish I would have learned early on how to spend my money correctly. I would be a lot richer today. The secret to financial wellness is to have a plan. I think for me, sitting down quarterly with my financial advisor, every time is about having a plan, right? Sitting down, she said, what do you want? And my answer back was, I would love to live the same lifestyle that I live while playing an NBA when I'm not playing. How can I get to that point? What do I have to do to maintain this level of lifestyle? And we had to sit down and come up with a plan. And that plan allows me to understand, okay, I got a budget, I can't spend over this, or if I go over, okay, I got to make some money somewhere else, I got to hustle. So I think for me, is if you have a plan, then you know where you're going.
Okay, so I think you can see there from Dwayne Wade, he actually gave you some sound advice there, how he was making money and he spent all of it because he did not have wise counsel. In fact, the Bible says, in the multitude of counsel, Vernon, there is success. It says, blessed is he who walks amongst the wise, for he's like a tree. He's like a tree next to a river. He bears fruit in all seasons. So already you can see there's the importance of having a financial advisor to help you through this. So always get some sort of advice. You either follow somebody or follow some script that they show you. So maybe if you can't afford a direct advisor like Dwayne Wade, do the financial advisors around you have a book you can follow? Do they have a course you can follow? Do they have a template of a guideline that you can follow, that you can at least follow, because you want to follow some sort of instructions and follow some guideline. You need to be guided, especially in the early journeys of your financial journey. The other places you're able to learn from Vernon is examples. Okay, examples you can learn from other people who share their stories. In the NBA, actually, what they've been doing is that the NBA players were notorious for going bankrupt after they're playing. What they did was they started to bring all the bankrupt players to come and speak to the NBA players and tell them, look, this is how we went bankrupt. What you're seeing now is the multitude of NBA players are actually under a financial advisor because they have seen the horror stories of the past players and what happened to them. Magic Johnson even said watching Kareem Abdul-Jabbar go into poverty or go into bankruptcy scared him into now becoming a businessman and managing his money correctly. And that's how he's worth $600 million after not playing in the NBA for the past 30 years almost. So I'm going to give you an example, and it's a sad one for Zambia, but this is Elijah Letana's example that we often have to circulate time after time when he talks about what happened to his money, because he was a wealthy football player at some point.
Money, because at some point you were a millionaire in dollars.
Millionaire or billionaire?
Choose. You have to tell me. What were you, a billionaire or a millionaire in dollars?
Millionaire.
How did you spend your money?
I ate it.
How so? Were you thinking about tomorrow? Weren't you thinking about investing?
That time I wasn't thinking about that. That time to spend. No, when I go back, I'll get some more. When I go back, it's like that.
So how were you spending your money?
Come when you go to Dola, spend the time at the farm. And then you meet my relatives, they come, your friends. Because when you go there, they say, no, our footballer is here. Everyone, my fans, whatever, they will come. So you give them some. They might, oh, this one wants to go to buy, oh, whatever. Helping.
What advice would you give the current crop of Zambian players, those that are millionaires today?
They must buy assets, have good managers so that they can manage their monies, have businesses. Because when you stop playing football, those monies you're having, they'll stop. Now you start going to the bank, you withdraw. Don't think that they'll be going back to them bank. It's like you go there, withdraw, eat the money. Then you go back there, you eat the money. So now when you've got the business, you know that even if I spend this money or whatever, my business is booming.
So this is an example, Vernon, of as you could hear the words, he ate the money. And a lot of us can laugh. Okay, I know the temptation is to laugh, but the reality is a lot of us eat the money. Okay, this is what happens to a lot of people. Sorry, don't know. Yeah, Vernon's back with me. A lot of us eat the money, and I know the temptation is to laugh, people, but you know yourselves, you exhibit that behavior. Yes, he's burned through millions, and we can all judge and everything, but we all exhibit such behavior. So it's very important to have a learning mindset when it comes to money. And if you have a learning mindset, the learning mindset means you'll absorb information, you will seek wise counsel. You'll also look at who you're surrounding yourself with. Remember, he would say he would go to the farms, people would just consume, because he was surrounding himself with consumers of money. He was not surrounding himself with people saying, oh, I'm making investments here. Kalusha Bwalia, by the way, talked about the same thing, that in the first few years of his career, even in Belgium, he saved nothing because he thought that money was going to last forever. Until eventually someone was like, hey, my friend, you need to make better decisions. This may not last forever. So even he had to now start toning down and looking what to do. The biggest part of your financial journey is going to be, Vernon, making those actual financial decisions. When you make decisions and you repeat them, you build the right habits, you refine them, you improve them, you learn from your mistakes. Those are important things that you really want to try and address, Vernon, in your life. But just finally, I'll give you what we call 5 rules to money that Vusi Tembakwa made. I'm not going to explain them. You have to go. I go deeper into these whenever I do classes. I give like full sessions on these 5 rules of wealth and money. But he actually explains 5 good rules of money, and I'm just going to state what they are. 1, understand the rules of money and of letting other people use your money. Rule 1 is they must have good character. They must have a good track record. They must have a credible story as to how they're going to grow your money using deep, sound technical knowledge. And they must be knowledgeable of money themselves. Rule number 2, the function of money is not to buy stuff, it's to buy time. Rule number 3, you must focus on cash flow more than cash. Rule number 4, you must value quality advice. And rule number 5, wealth is for personal, meaningful reasons, not for public accolade. And if you're able to start understanding the rules of it, then you will learn it much better. And I'll leave you with the quote of the day, Vernon, which is on our final step here. I'm going to leave you with my quote of the day. And the quote of the day comes from Chris Bertram, who says, "You are in a growth mindset. What that means is that you choose to see struggles and challenges as an opportunity for growth and for learning and for development." Okay? And that is the most important thing. Whatever things you're going through financially, even your bad experiences, you can laugh at Elijah Litana's story, but I've seen a lot of people, Vernon, who have made wonderful financial turnarounds because they've gone through financial messes. I've gone through messes in my life, and those are the things that have taught me the greatest lessons. The pleasures of getting things right, sure, that's okay. Your biggest lessons are going to come from your biggest mess ups. So always look at your worst times, the things you've done the worst with money, and then make sure you write that down and say, what have I learned from here that I should not do again? What led me here? Review where you got, audit your steps. What got you to this point? And then start to visit back and say, right, so this is where the problems in my life are coming from, and I need to try and improve it. Could it be the way you're banking your money, managing your money, wherever it is? What systems do you have? The habits you've built, the people you're surrounding yourself with. What is it that's causing your money to dissipate and never be managed correctly? If you are in a constantly learning mindset, you'll spot the risks, you'll spot the problems, you'll see things before they get to a point where somebody's asking you, what happened to your money? And all you can say is, I ate the money. So you can see Dwayne Wade learned from his mistakes before his retirement. Elijah, unfortunately, did not learn from his mistakes. And the stories are vastly different. One got an financial advisor before retirement. One waited for his retirement to show him what his life was like. It's a sad story, but that is the realities of life, people. So learn from others before you must learn. Another thing is learn from others, people, before that lesson visits you. Wise people, and Vernon, a smart person can learn from their mistakes. A wise person can learn from another.
Yeah.
Learn from others. Otherwise,
Absolutely.
because I know people, no, it's different. No, things are okay. Okay, we will see. That is the learning
There's
mindset when it
That's
comes to
one
money.
thing with sports guys, especially in football. It's just the way they handle interviews. One was talking about running away, and this one was talking about eating the money.
But he ate the money. That one is telling you the truth. Guys, have a good day. I'll talk to you later.